Welcome back. What's going on, guys? Welcome to the Digital Real Estate Channel. This is your host, Dre. We got Bitcoin going on its way. Anyway, here we are. Thanks for tuning in. Appreciate you guys. We'll get started here in a moment. Don't forget to hit that like button and please subscribe. That notification bell will help you get notified when that content is dropped. So here we go. What we got going on today is pretty much the same old, up and down, left and right. So here we are. In the 4 hour, we got a couple different indicators up here at the moment. The reason why we're having this stuff up is to show people different things. You know, everyone trades differently, and you know how these indicators can help you, make decisions on your trade, or help you, understand the market a little better. If you're just buying, holding, DCA. So, thanks again for stopping in today. Got a couple things to show you. I'll make it real quick. So we got this descending trend from the top, as you all know, from 69,000. We're going to meet that here in this rising wedge of about 42 to 43,000. You may wick over, come back to retest, and then probably break down, even go back down to this $34,000 level. I think it's important that we make a lower high here. It doesn't have to necessarily, at least now in the short term. Our short-term target, or I should say our short-term target is around 42 to 43,000. We're looking for 54 once we break above that and hold on a retest, a back test, however you want to call it, and then we'll swing back up to test that area that we found resistance before. I keep trying to explain to people that the rich have basically flipped the switch. What that means is, once the market, gets to a certain point, the bigger players decide to, either take profit or, reposition back in. So when that occurs, especially with a smaller asset class, you get a pause in the market. It basically will just kind of stop. And then it will make a, kind of invert head and shoulders here. And then you'll see that once we get that push over the initial resistance that made us drop, you'll see a little bit of an ascending trend or maybe a flag, and then back down to retest, and then it'll break back up. That doesn't mean Bitcoin's going up forever. But in the short term here, we're going to take this rising wedge up. We just measured it out from kind of the point where we failed. We did like a doji candle here. This is the 4 hour. And then the market just spilled down, swung back up, hit that resistance, and then dropped again. So that's kind of why we're looking at this here. You can also go off this candle, maybe make it a little tighter in. It doesn't really matter now. We're past that point. It's not really going to affect pretty much where this price movement is going to be expected to ride along. It could change, obviously, if it breaks down below here or breaks up above here. But for the most part, we'll stay within this area until we get to our overall resistance, and then we'll make a decision there. If we're going to break above it, come back to retest it, then break out to 54, or we're just going to break out and then fail the test and then come back down, maybe double bottom here locally, or even locally down here. And then if we fail here on a major close, even 4 hour or a daily, for sure, and definitely a weekly, then we're looking for a lower area of about 31.6, where we have a major player sitting there with about $1.26 billion. You guys can figure out who that is. But anyway, so real quick here again, we're just going to swing through this little rising wedge, we call it. Certainly could spill back bearish to retest lower levels, and if they don't hold, we're going to drop even further. But you could see, in the overall market here, we're looking at we got a lot of volume perking up here, especially over the last 12 hours. You can see it's just it's starting to stay above where it was when it was kind of flat in price, where we kind of felt like maybe we were starting to build some support. So that's why you want to use value. We want to see based off previous moves where the price kind of sat, and if it sat above or below at a certain point, what kind of action was going on. Was there volatility? Was there Was there buying action? Was there selling action? Then you can use this indicator here to let you know if you're overbought or oversold. The indicator names are here, just so you guys can see what I'm using. And something you can try out. I like this combination, especially for day trading. If we zoom in here to see what else is going on, it's kind of like a Bollinger Band here. You can see, the expectation low is here, and the high is here within this short-term period. It's basically telling you got to go for a green buy if you get a close over these lines here. It just tells you kind of, expect more, upward pressure, and then if you close below down here, you can expect possibly downward pressure. So you can kind of see that here. We closed above it when we weren't closing above it. So these the closes are down here on the reds. And then see we tested it, and then it broke below it. And once we closed above it, then the market decided to push back up. We might have a 3-soldier event forming up here, and that would be nice. But really want to expect us to get over 37.1 when this 4-hour closes at about 11 o'clock Eastern Standard Time. So zoom back out again here. We are over sold at the moment, so that's another indication that we should expect another push back up. We're expecting 39.5, which is right about here. So maybe by the 28th at midnight, or UTC midnight, whatever that may be in your time zone. Just to kind of anticipating, a little swoop up here, find old support now, seeing if it's at resistance, and if so, then we'll swing back down here, back up, and just kind of play within this area. And if we break below or break above, then we expect more movement up here or down here. Just got to play it for what it is. Then we have this other long and short indicator here. This is the name of it. So what you can do is just kind of, follow this, and then if the price is kind of moving that direction, then you can more lean towards that way if you're trading. Wouldn't go 100% on one indicator if you're going to use indicators, but they can help you, especially when you're not used to the market. If you haven't been in it for years and know which way the price kind of flows between, because that's all it really is when you're trading daily. You just find the flow and you go with it, and then once the flow stops, then you go the other way, and then once that flow stops, you go the other way, and then eventually the market makes a decision when it gets pinched in real close. So then you got to keep your eye on it close. So that's when you want to kind of back off and then wait for a breakout, and then decide where resistance is from there, and then maybe possibly short. You could jump it along real quick and scalp out, but not recommended, because things can obviously turn the other direction. So if you're going to do that, obviously always go small when you're going with those type of quick move positions. I wouldn't go heavily on anything. You get damaged pretty quick. I mean, you may have some runs where you're tearing it up and making an incredible amount of money, but what happens is psychologically you start thinking bigger, and then you start playing bigger, and then when things change ugly, you just kind of go backwards. So don't go there. Just keep things modest, and if you're trading leverage, try to keep it under 5%, and definitely 1% max is ideal, unless you have a really good confirmation that you're going one direction, and that market's going to definitely go that way, which is not always the case. But if you have a good 90% plus feeling on something, and we're at a bottom and you're going long, and if we're at a top you're going short, then hey, it's not an issue at all. And at this point, you could get that on a long situation, especially since 30K at the moment looks unlikely, not impossible or out of the question. Just for the moment, it's just looking unlikely, and that depends on when we come up to here to the 43 and spill back down, or break over and retest. How that action plays out. So again, we're going to stay there on the 4-hour. When things change, we'll drop videos or content just so you guys can see what direction we're going here. We are playing the little short-term game, but also looking to really position something larger, and in hopes to, add on to the position or the portfolio like everyone else was. That's the name of the game. Collect as many coins as you can, because there's only 21 million out there, and they're not all out there yet, and they're not all available, and there's not that many circulating. a lot of dead supply out there that you can't even get a hold of. So I mean, unless you're looking to hold some type of property that kind of costs you money. I mean, Bitcoin doesn't cost much to move around, and you don't really need to move it around, especially if you have it in a secure place. But if you have property, you can't really move it much. And then if you have other things like cars or collectibles, and you have to worry about them getting damaged. So for the most part, crypto is pretty secure. Um, Above everything else for the most part, so keep them locked up, and don't get overly exposed to any position up or down, and just be patient, as I always say. So we look at the balances on the exchanges, and it looks like we got a few ticked on there. um, People panicking or playing games. I did move some on yesterday just to add to a position. So nothing to sell off or anything like that at the moment. It's obviously we're at a lower price point. If I was going to sell anything off, it would have been sold off a long time ago. But we're just adding as we speak. We're expecting bigger things. So as you see here where we're at with the exchange balances, not much of a change. So we have our short term at 42, 43, the short term at 54, the midterm at 88, and then you're probably asking, well, where do you think this market's going overall? And you'll be surprised when I tell you. So if you look at the previous markets, like I said, you take the second low and then you measure up the move. So you have that here to here, and then this is our second low here. So we're going to have that to somewhere up in this area. Eventually, when the market kind of just finds its support and then kind of rolls back up, back down, rolls back up, back down. And it's going to take a while. I mean, it may be in the summer or fall months, of this upcoming year, we may get that big, push up like here, and then it comes back down, and then does a U like it did before. Not obviously the same thing, but something similar as far as we're entering a bear territory or a major downtrend. This is a temporary downtrend that we're experiencing now for the moment. I mean, it could be the major one too, but you have to play it day by day, 4 hour by 4 hour, and then you can kind of see which way the market's going. So this is the second low that I was talking about, the last run. You can see the first lows here, and then you just count the amount of days or the percentage move up, and then you do that the same thing with the other two runs back here. You're just your second low, and then you just measure your move up, and then same thing here. This was a short-term one. You just find your second move and then measure up. Each time you can see, once we do like a hump, and then bam, and then even in here in a smaller time frame, you'll see it, and then you get your hump, bam. Once you get through that really heavy consolidation area, now ours is more flat than these other ones where they were more ascending, but we still have an ascending consolidation at the moment. We had a 28.8 low to from a 65 high, and even a 28.8 low because that occurred last January. So you had that, and then you get your 28.8 to 69, and now we're down to the 34 or 32.8. If this holds, basically, there's your kind of ascending hump, double hump, humpback whale, or whatever you want to look at it as. This is two like large consolidation push-ups or ascending trends that did retest, and then you got the really kind of parabolic get out of my way moves with even still humps in between. I mean, you had two more of those, and then they got really ascending here. So we got a short ascending now. So we're kind of just starting out, and the reason why this chart looks a lot different than theirs is because we're not in this period anymore. But if you zoom in, you kind of see the same thing. We are having larger drops, but we did have a quicker uptrend initially. So that's what's throwing things off a little bit. You have to really look at things a little differently because the move is different each time. So the length of it's long, different. The percentage within a certain time span is different, and that'll always be different. And that's why you trade, close to the 4 hour. to really see each way the market's going, because then you have different time zones waking up and people's different perceptions and realities and whatever, so you don't know which way they're going to decide to go. So hope this helps as far as that long-term target. Before this run's all said and done, we're expecting somewhere in the $300,000 price range. 317 to be exact. Just about 1K below where a Citibank advisor had, anticipated also occurring, December that just passed, but it didn't happen. Whatever. Well, if we look at things a little differently, that second low is right here. We still have plenty of time. We're not even at the 2-year mark, which doesn't occur to this March. So that's all I got for you guys today. Thanks for tuning in. I know it's another long video, but there's really a lot of information that I want to get out there to people who are kind of new to this market, so they can understand where we come from, where we've been coming from. So otherwise, take care, guys. Thanks for tuning in. Later.